people see the word title insurance on a settlement statement, or they're buying a house, it's I remember even when I didn't when I first got into title insurance, I'm like, what the heck is this stuff?
You can buy a home and not have title insurance. But if you buy that property and later you find out, like you were saying, all of a sudden that lien shows up, guess who's obligated? You are.
If you have title insurance, right, that insurance will kick in, and they're going to pay for those legal fees. They're going to pay that lien that's on your property. It's just a huge protection. Biggest cost associated with a claim being paid out for shouldn't come as a surprise, but it's fraud and forgery. In the year 2022, there was $596 million in claims paid out to people.
Oh, that's way more than I would have suspected.
$596 million.
So these are title insurance claims,
Correct.
And those were payments. Give me some ideas of the benefits of title insurance.
That's a great question. I mean,
in life, there's a blueprint for everything. There's no need to start over. Hear from industry leaders, those at the top of their fitness journey, and real estate gurus. They tell you exactly how they did it. All you have to do is listen, learn, and execute. This is The Blueprint with Brad Rice.
All right, guys, we're back again for another edition of The Blueprint. And today, my special guest comes to you from the very exciting business of title insurance. That's right, title insurance. When you buy or sell or refinance your property, you've probably seen that line item on your closing statement and always wondered, what the heck am I paying all this money for? So I figured we bring in an expert. Today, we've got Chris Norman, who is the Vice President of National Accounts at the third largest title company in the U.S., Stewart Title. Thanks for coming in, buddy. Thanks for taking the drive.
Yeah, absolutely. Thanks for having me.
Yeah.
No traffic. It was smooth sailing.
That's pretty cool.
Yeah.
That doesn't happen very often. Yeah. Chris and I met at the first time we met was, we were trying to remember the date. It was just before COVID hit.
Yeah. So
and it was in San Diego.
It was at the MBA.
That's right.
National.
San Diego. The MBA annual convention down, and it was in San Diego.
Yep.
And I forgot.
In line. I think you were behind me. Or
yeah, we were in line going to an after party, right?
Yep, that's right.
And I know what it was, because you're like 7 foot.
Yep, that's exactly it.
Is it 7'2"?
6'6".
You're
but
6'6", close enough.
It's all the same. Right?
I mean, it's all within a half a foot. And I remembered you could see everybody, and I couldn't. Yep. And then I sent you to I go get me a drink, man. I can't make my way through that crowd. And you're like, okay. And you just did it. And it was at that point like we were hugging each other that night. It was kind of funny.
That was so fun.
God, it's hard to believe that was so long ago.
Yep.
So look, man, you've helped me. You've helped my mortgage company out. You made some amazing introductions for my tech company, HomePie. With folks from Stewart that have been super supportive. Yeah. And, just were kind of the catalyst to a lot of relationships in a very short period of time. So first of all, thank you for that.
Yeah, absolutely.
But because we use you, and I've even referred friends. So you were talking about a friend I referred recently to help him. It was, he was selling his house, and he asked me, he goes, do I have to use the title company the agent wrote in the contract? And I said, no, man, you can use whoever you want. Yep. And I referred him to you, and you took care of him. You saved a lot of money. But, people do these real estate transactions. And I think a lot of people just understand that title's part of it, or escrow is part of it, or some of these other fees that they call junk fees on there are part of it, but don't really understand what those are, what they mean, what it does. Yeah. And so I wanted to take some time and just kind of talk about what title insurance is.
Sure.
So like, what is title insurance?
Super exciting as well.
Yeah, it is exciting. but let's just start with that.
Yeah.
What is title insurance?
Yeah. So essentially, title insurance it's a one-time purchase. Anytime that you do have a transaction, whether it be a purchase of a home, a refinance, that is going to protect you from fraud, from forgery, from past liens, heirs that might come back knocking on your door after you buy your house. It protects you from all of these things that could potentially cost you a ton of money.
And it ensures that you're getting good title
Correct.
to the property, so that you're not buying something, paying for something, coming in with a down payment or all cash or whatever the combination might be, and winding up with a lien that you didn't know existed, or somebody has a more, what do they say, not a more prominent right, but a more perfected right to that property than you do.
Correct.
Right.
Yeah, I have a fun quote here too. It just says, title insurance is a one-time purchase that protects you from hidden issues in a property's history, like unpaid debts or ownership's disputes, so you don't lose your home or money after closing. So there's different types of fraud. I had some fun stats too that said in the year of 2022 there was $596 million in claims paid out to people.
Oh, that's way more than I would have suspected.
$596 million.
So these are title insurance claims,
Correct.
And those were payments. My experience over time when there's a title issue, and I want people to understand this, because you can buy a home and not have title insurance. Like if you're buying it all cash,
correct,
and you don't care that the seller gets their portion of the insurance or the owner's portion, and you are not getting a loan, so you're not required to have the lender's insurance. You don't have to. Like, it's not a law that you have to have title insurance. But if you buy that property and later you find out, like you were saying, there's a lien, or they had done some work to the property, the contractor, there was a contractor they never paid, and all of a sudden that lien shows up, guess who's obligated?
Yeah.
You are.
Yeah. So if you have title insurance, right, that insurance will kick in, and they're going to pay for those legal fees. They're going to pay that lien that's on your property. They're going to essentially protect you from anything that you didn't know existed, or that the title, or say the public record didn't show that there was, this lien. Otherwise, it would have been paid in the first place. And so it's just a huge protection.
Yeah, so we're talking about, when you say public record, so most things get recorded with a recorder's office, and in states and counties where it's, let's say, more efficient, I won't say efficient, I'll say more efficient, those documents get recorded in a fairly timely fashion, maybe a day, maybe two. You take a document up to the recorder's office and you pay to get it recorded, it'll probably show up, at least from a direct search within a day or two. It may not show up on like your general searches that are pulling data every now and then into them for, maybe a couple of weeks, but a title company can go and do a direct search with the county to do that. If you're in an area, a city, a county that's a little more laid back and rural, they could be a year or two behind.
Correct.
And that data then, even if you went to try and figure out if there's liens, you may not have the access to it.
Sure.
Still exists.
Yeah.
It's in line to get recorded to become public knowledge.
Yep.
And so it's still a document that has its rights to that property, but you don't know. So I think probably more so, if you were to look at the $560,000 of payouts that you're talking about, my guess would be, and you can tell me if I'm right, that most of those are in those counties that are very delayed for their recording efforts.
That's a great question. I mean, the biggest cost associated with a claim being paid out for shouldn't come as a surprise, but it's fraud and forgery, right? So not necessarily the rural towns, because we do have curative teams on our title company that go into as much as information that we can dive in, right? Because we're on the hook.
Yeah.
So we want to make sure and ensure that the property is as clean as can be, because we don't want claims again, because then we have to pay it, right? And then we're less profitable. So fraud and forgery, I mean, it's the average claim, I think it's like $150,000, roughly right around there. A claim. It's absolutely insane that you would be on the hook. So like you were just saying, you had somebody that just buy the house cash, right? You don't need to necessarily spend that money for the title insurance, but if you do come into situations, say the seller is fraudulent or they missed something along the way, holy crap, you just lost.
Or maybe that seller didn't have the legal right to the property.
Exactly. Right.
They were squatting there. And
so that's the risk that you would take.
Understood. Okay. That makes a lot of sense, though. Fraud and forgery. I'm thinking about a transaction that I'm actually involved in now that is the case. And we're trying to help the owner of this property, to refinance into a reverse mortgage. She's an elderly lady, but she was taken by fraud. She has 2 sons, and there was a property that one of the sons had that he was getting financing, private financing on, a big property. It was like a lot of land, and he was getting private financing on it. And without him being astute enough to really read the documents that he signed, they cross-collateralized her property with his signature, that he didn't have a right to that property.
Ugh.
And so, but this was accepted, and it was accepted by the title company, and it was accepted and recorded and became a lien on her property, this cross-collateralization, and we're having a heck of a time getting it removed. And the title company has come in to help, but there's not a lot of movement there. It's been about a year already.
Wow.
And so this is taking a long time.
Yeah.
And they're denying wrongdoing and all sorts of things like this. So it's but better to have it than not to have it. She just didn't. It's not on hers. The title insurance was on this other transaction. This just happened to be cross-collateralized. So she's a victim and doesn't really have direct coverage. Does that make sense?
Yeah.
So, but that tells you that there is a lot of fraud and forgery, and it does happen out there. And the title insurance is protection for that, just like every insurance is protection for what if, right? So give me some ideas of the benefits of title insurance. Are you a tech investor looking to shape the future of real estate? HomePie is the #1 for sale by owner marketplace, and we are revolutionizing the way homes are bought and sold. I'd love to hear from you. Just email invest@homepie.com and let's chat. Now back to the show.
Yeah, so I mean, it's going to protect you and your family and your home against intruders or bad guys or things that were at your property before you even got there, right? So things that you don't even know exist, you are not on the hook for. The insurance company, the title insurance, is going to cover anything that's before. Now, anything after, any new intruders, that's on you, right? But the insurance is to ensure that everything in the past is
from the point that you record that you're the new owner forward.
Yeah, or even your heirs, right? So if you pass on your home to your next person, your heirs are still covered as well.
Okay.
Yeah, so it's a cool.
Got you. So let's talk about then post owning, property title transfers. Mm-hmm. You own the property now, and then somebody tries to file something against your property or forge documents of you selling your property to them. Is there any type of insurance for that? I know LifeLock offers some sort of a product for title protection.
The new stuff. Yeah. You know, I got something in the mail from that, and I thought it was just it actually kind of scared me at first because I was like, oh, do I need this?
Yeah.
I'm not too versed in it, to be honest. I don't know. I know that I talked to my title officer at Stewart, and I asked him about it, and he's like, if you want to waste I think it was a couple $100 or whatever it was. He's like, if you want to waste a couple $100, go for it. That was what he told me. So that's kind of the gist. Once he told me that, I'm like, all right, well, I guess if it's not a concern to you, it shouldn't be to me. So
yeah, I think it is. They sell on the element of fear.
Yeah.
Because there is so much fraud out there. Yeah. They're like, hey, lock your title down too.
Yeah, absolutely.
And from what I gather, at least with this, from reading about it on LifeLock and seeing what the offer was, they'll monitor the recording of documents on your property. Right.
Which is already like new recordings.
So new recordings. Okay. So just like you search when you're doing the title policy, you search to see if there's any documents that you uncover that affect the clear title to deliver to somebody else.
Sure.
I guess it's constantly monitoring those addresses that you put in there to see if documents are recorded, makes you aware of it. Hey, was this you? Did you record this document?
Yeah.
If not, there could be a problem, and then they jump in and try and unravel that.
Sure.
So I guess there's some value to that.
Yeah, there could be.
I don't know how rampant that type of fraud is, but to me it sounds like it's potentially a benefit. Yeah. I know last year, I think most people have experienced some credit fraud at some point.
Sure.
Whether it's somebody taking your credit card and you're like, hey,
twice.
Fraud alert.
in the last 2 months.
Right. And then they're like, you're not on the hook for it. Don't worry about it. We'll send you a new card. You know, you're going to see credit for this on your credit. But I was logging into my bank account, and I saw an email address in my profile that I didn't recognize. I'm like, what is this? And so immediately the hair on the back of my neck stood up, and I'm like, uh-oh, this is not good. And it was my main login for all my accounts, like where everything shows into that one account. It wasn't like a set, like, oh, this is just one of my businesses. It was the main login, and I'm like, oh, crud, what is this? So, of course, I immediately reach out to the bank. They're like, we don't know. It looks like it was a login with your login that added it. And I'm like, oh, crap. Because I, of course, changed my passwords and all that sort of thing. I'll just kind of, long story short, at the end of the investigation, it took the bank about 2 weeks because one department doesn't talk to the other, and I'm part of even the private bank where I've got somebody who's doing this work for me.
Yeah.
But, the tech team doesn't talk to the to the banking side, which doesn't talk to this side. It's like a crazy thing. Anyway, they came back and they basically said it was a technical error that somebody had logged in and then it attached to my account when it shouldn't have. And I'm like, that is crazy. But during that process, because I was really freaked out, like this is, shoot, you get your money taken out of your accounts, you may never recover that. Like it's not like a credit card.
Yeah.
And I've always recommended that people use a credit card versus a debit card. Like I've never owned, I don't have a debit card. I've never pulled money out of an ATM. I use credit cards for everything. I pay it off in full every month. I get the benefits of the points and whatever. Yeah. But for your bank accounts, you don't have that same coverage. Now, there might be some coverage if you're using a debit card and then there's fraud on the debit card and it access, fine. Sure, yeah. But if somebody actually breaks into your bank account and they take your money, there's really no coverage for that.
Sure.
So I went and I signed up for LifeLock.
Oh, okay.
And I was like, at least, and it was a friend of mine that said they had a similar issue and they said they signed up for it. Theirs happened. And then while it was happening, they signed up for it and they said, oh my gosh, they were so helpful. They made all the calls for me. They did all this and that. Wow. So I thought, okay, I'll invest some money and I'll get signed up with it.
It was a few $100.
I think whatever their top one was, I think for my wife and I was like $1,000 a year, or maybe it was less than that, maybe 700 or something. But it was that peace of mind.
Sure.
So I think that's really what everything boils down to is peace of mind.
Correct.
Right?
Yeah.
And so when you're buying a property and you are getting a loan as the buyer, title insurance is required.
Yeah, it's mandated by the government. Yeah.
And so, and of course, because the company, the mortgage company that's going to have the lien on the property that you're making payments on, they want to make sure there's nothing going to affect their lien.
Correct.
So that policy that you're getting is called a lender's policy, right?
That is a lender's policy.
Right.
Correct, yeah.
When you're buying a property, there's two policies.
Yep.
There's the policy that is the seller's policy, which is the owner's policy.
Correct.
And then the buyer's policy, which is the lender's. What's the difference between them?
So the lender requires the lender's policy. So typically it's on like a refinance, something like that, where you don't have a choice. Like you have to have it. The investors won't approve the loan or fund the loan without it, and it's there for protection. So it just dots all the I's and crosses all the T's. And the owner's policy is what we were talking about earlier. That's when you're typically purchasing a new home or an investment, right? And that's protecting you again on all of the bad stuff that potentially could have happened, in the past.
Got it.
So I think when people see the word title insurance on a settlement statement or they're buying a house, it's I remember even when I didn't when I first got into title insurance, I'm like, what the heck is this stuff? But they're like, well, why do I have to pay? And obviously there's the reasons behind it, but what people don't realize is that it's typically shoppable, right? So it's like, just because your lender is telling you, to use ABC, title company, there's so many options out there that it's a shoppable cost that you can get it down for the same coverage.
Why is that? Why? I guess with every insurance, right? Every insurance company may charge a little bit different. If you're shopping your auto insurance, maybe it's based on the risk that they see where the property is. But so So if you're a consumer and your lender is saying this is the title company we're using, let's just say it's Stewart, right?
Sure.
And you have used a different company before, say it's Fidelity, or your aunt works at Fidelity or whatever, and you're like, hey, she can get me the employee discount on this. You can insist that you have a different title company?
Yeah, of course. Yep. Yeah, so you can say, hey, Brad, I want to use Stewart Title. Stewart Title did a great job. They bundled the escrow and title before. We were able to save, a few $100, few $1,000. I mean, I saved somebody, I was like probably a month and a half ago too. It was a big purchase, and the escrow company, this is insane. The escrow company was charging him $12,000 more than what our escrow was.
Wow.
And it was like a $5 million purchase, which is obviously pretty substantial, but they charge, I think it's $2 per 1,000 plus a flat fee. And so you can imagine as the price goes up of your purchase, so does your escrow cost. It's the same amount of work essentially for us. So what Stewart's done is we've just done a flat fee on our national side.
Is that a flat fee for escrow?
Escrow, yeah.
Okay.
And then title's tiered, right? So we have to file states per their laws and guidelines. And so each tier, so a tier would be, say $0 to $250,000 loan amount, right? Is, you call it $350, right? And then you go tier, et cetera. It gets a little bit more expensive.
Okay, so let's talk about the filings you have to do.
Yeah.
So title insurance has to do filings. They publish their rates in every state.
Yeah.
But there's different rates that they publish, right? It's not just one set of rates.
That's a technical question. So there's certain states, I mean, it gets nitty gritty, right? So like Florida and Texas, right? The promulgated states, which means that the state actually tells everyone what the fee is going to be. So there's every title company, no matter what it is, that title insurance is the exact same. The difference would be the ancillary stuff, right? The recording fees, the what doc prep fees, the courier fees, all of that, or the escrow fee, the settlement fee. That's what would be different. So those are the promulgated states that are filed. That's always the same.
So some states dictate, and so let's give me a state that's promulgated. What?
Florida.
Okay, Florida. Yeah. In Florida, yeah. Whether you're going through Fidelity, First American, Stewart, Chicago, every title insurance rate's going to be the exact same.
Exact same. Yeah. Well, it's even. Yeah, it is. Yeah.
Oh,
the title insurance. What they have also too, like you can qualify for a loan. So, say if you just refinanced your house or you just purchased your house 2 years ago and you want to refinance now, they have a reissue rate and a butler rate. So whatever you can qualify to actually reduce the title insurance cost. It's pretty helpful for obviously the consumer. But
is that only in the propagated states?
Yeah.
Okay,
yeah.
Got it.
Yeah.
So they're insisting on this is the way that you're going to handle.
Yeah.
So, because I remember from a long time ago when I was flipping homes, I would get a short-term policy. I would be buying a property. I knew that I'd be fixing it up and maybe turning around to sell it in 6 months. And I didn't want to have to pay for title insurance 2 times.
Correct, yeah.
And so I get this short-term policy. I think there was another name for it, hold open policy or something like that. And basically that meant that all they had to do when I went to sell the property is just do the research from the date I acquired it to the date I sold it.
Yeah.
And it reduced the cost to very, very minimal.
Yeah.
Is that what you just said about the propagated states in, saying if you have a refinance in a certain period of time, it has to be a lower rate?
Sure. So it's similar concept, right? I think you were talking about the binder is what it called.
Yeah.
We would do that for investors, right? So guys that are going in and flipping homes, like you were saying, I don't know the specifics behind it because it's not something I deal with daily, but we have a specific division that handles those types of transactions. But yeah, you would be able to save money, so you're not double dipping or double paying, penalized, right, for the same insurance.
So if somebody is flipping properties, if they know that they're going to be turning it around and selling it in a short period of time, it's good to get this a short-term binder.
Yeah, absolutely.
Okay.
Yeah.
All right. And you have to ask, you can't do it post-close. You have to ask for it beforehand because that's a type of policy that's issued in order to take advantage of that.
Yeah, I mean, we have a whole division in Florida that literally just deals with that type of transaction because it is so specific.
Yeah, that makes sense.
Yeah.
All right. So let's talk about who pays customarily and why. So on a purchase, who typically pays for what policies and why is that the tradition?
My advice for someone selling their home: number 1, do it yourself and save. Number 2, use HomePie.
HomePie makes it easy to buy or sell without an agent. I can list a home in minutes and start receiving offers right away from buyers.
When we discovered that we didn't have to lose $40,000 in agent commission just to upsize to a larger home, it was an obvious choice.
List your home for free at homepie.com. Keep your piece of the pie.
Yeah, so owner policy will typically the seller will pay, and that's because they're trying to incentivize right for the buyer, and then on the lender policy would be you, right? It would be the person taking out the refinance. The buyer essentially would be paying for the lender's policy.
So that's the traditional way.
Yeah.
And the owner's policy is what, usually about double what the lender's is, or triple the cost?
I don't know. The number's off because it's just based upon loan amount.
Okay.
Really,
So that's true.
Yeah.
So the owner's policy is based on the purchase price.
Yeah.
And the lender's policy is based on the loan amount. So
Correct.
if somebody's put a larger down payment,
Yeah.
they're going to have a lot lower costs. Then it could be triple.
Correct.
Whereas if somebody's coming with very little or zero down, it could be closer.
Yeah.
Okay, that makes sense.
Yeah.
But why is it traditional that the seller pay the owners and the buyer pay the lender policy during a purchase? Do you know?
I don't know. That's a great question. I mean, I would say that it's to incentivize that the buyer, for the buyer, the seller pays it.
Is that traditional everywhere in all states?
I would say that it is.
I don't think it is.
Is it not?
I don't think so.
I don't know. I mean, I don't really get into the nitty gritty of that portion of it. But
Mike,
we could look
curious.
it up.
If you looked up,
What's the
because I think
stat?
Florida is different.
Is
if
it?
you look up in Florida, who traditionally pays the title insurance? Let's see what it says.
Oh,
'Cause
I
it's
think you're right.
different.
It is in Florida. The buyer would.
I think so.
Yeah.
Because in California, it's definitely traditional
Yeah.
that a seller pays the owner and the buyer pays the lender. And we're gonna drill down into the traditional comment here. Yeah, let's see what this says. Who traditionally pays the title in Florida? The seller pays title insurance. However, there are exceptions to certain counties where the buyer may be responsible for paying. Okay.
Yeah, it's negotiable, essentially, is what they're
But
saying.
I'm saying that I think there are certain counties where it's more than just traditional. Oh, that one says it can be negotiated. Seller covers title insurance, good faith, buyer's concerns. Let's change that search to who traditionally pays the owner's policy, the owner's title policy in Florida. Yeah, let's see what that says. The seller pays it. Okay, now change owners to lender's policy. And maybe I'm going to be corrected here. I could have sworn that Florida was a little different. Oh, there you go. The seller typically pays. But it's negotiable. Pay the insurance. Open that up. That show more, including the lender's policy. Yeah. So yeah, I thought there was something kind of different
So
there.
you can see here, buyer paid county. So Miami-Dade, Sarasota.
Yep. So each county may do it a little bit differently, but I do remember there were some transactions in Florida. I'm like, oh wow, look at this. The seller's paying both the lender and the owner policy.
Yeah.
And I think that may be the case in a lot of cities and states, that it's just that's the way that traditionally it was done.
Yeah.
And I do believe there are some areas where it's like you can't even negotiate it. That's the way that it's done in that county.
I believe you're right, because I do remember, I think a couple years ago we had a situation. I was like, oh, learned something.
Yeah, it was something I didn't know before too. But if we're talking about California, we use the word traditional on who's paying the buyers, who's paying the seller's policy. But the reality is it's negotiable. And if you're writing an offer, you can ask the seller to pay for both policies. If you're writing an offer, you can say, I'll pay for both policies. You want it to be more aggressive, right? So let's just say that you're in a scenario where you're the buyer of a property and the seller is paying the owner's policy, you're paying the lender policy. And in the offer, you put buyer's choice instead of seller's choice.
Mm-hmm.
And the seller comes back and says, nope, this is going to be seller's choice. Typically, who's dictating that?
Well, it depends what market we're in, right?
Let's say California market. But
I know, but like what time? Are we talking 2020, 21 when the seller had all of the power?
Let me ask it a different way.
Let me ask it a different way.
Let me ask you a different way. So it's been my experience that the majority, probably 99% of sellers, they don't have a relationship with a title company or an escrow company.
Correct.
The one with the relationship is the real estate agent.
Mm-hmm.
And they're the ones that are actually dictating it. And the seller's really complacent. They're like, okay, whatever you say, right? Because I don't know anybody.
Yeah.
And so you get kind of stuck with the title company that the real estate agent refers to.
Yeah.
Right? Mm-hmm. And as a buyer, if you don't have a relationship, do you really care either?
Yeah.
You're not really shopping it. You're letting the listing agent tell you who the title and the escrow company is. I'll tell you most of the offers that I've written, most, not all. It depends on the market, like you said.
Sure.
When it's a tight market, I can't be as aggressive. But in a normal market or a buyer's market, I will say who the title company is and who the escrow company is, because I know that if I bundle that rate and I get title and escrow, say from Stewart Title, I'm going to save myself maybe 30% on the fees than if they say, no, I'm used to using Sarah over at my traditional escrow company, and then we can get so-and-so title company to do the title insurance, and it's unbundled. Then you're paying that higher rate for escrow, and you're usually paying the table rate for insurance. You're not getting a bundled rate. So when I asked you about the filing of rates, when you do that, it's more than one. It's more than one filing, right? Because you've got the standalone, but then you got bundled rates. And if you bundle it, the title and the escrow, don't you get a lower fee?
Yeah, so it depends on the title company, right? So some title companies don't even have the escrow portion; they just do title. Our division actually does both, and they handle both. When I made the offer on my home, I went to the buyer or the seller. We were the buyers, and we said, "Hey, it's buyer's choice for title." And so they're like, well, let's compare. So their real estate agent wanted to use their title and escrow company for whatever reasons. I have my theories.
Can we talk about the reasons? I don't want to.
Well,
let's circle back to that because
okay.
I have a question for that.
Okay, yeah, no, and we can get into the nitty gritty of that.
Okay,
I have my own opinions on why the relationships exist.
Yeah,
and they're not necessarily legal reasons, but so when I proposed, hey, we're going to use Stewart Title, I said, you get your price and I'll get my price. And so I was actually able to save, I think it was like $9,000 on the entire process of closing costs just by bundling, and I saved the seller and me. So it was combined $9,000.
Yeah.
And he was just like, well, I don't care who we use if we're saving, $9,000. So, I mean, you just have to ask.
Yeah. So okay. So let's talk. So I've been in the real estate game for a long time. I started in the early 90s, right? 1993. It was a bit of the Wild West back then because we didn't have the same restrictions back then that we have today on insurance. Of course, I think it was post the real estate crash. That's when everything changed. Although there were some changes that led up to that, previous to it, not quite as dramatic. But after the mortgage meltdown of 2007, 2008, it completely changed the way that title insurance was proposed and what you could do to gain business. So in normal businesses, if you want to get customers, you can offer incentives. You can thank them. You can send them gifts. You can incentivize
staples.
You could do all sorts of things. That's just a normal business, right?
Yeah,
if you got a bookstore and you want to incentivize people to come into your bookstore, you can say, hey, look, buy 3 get 1 free, or buy 10 books and I'll give you a ticket to the Laker game, or whatever, right? But the insurance business is heavily regulated. Yeah. But pre-meltdown, and going back to the 90s, it was really about the relationship you had with your title company and your rep, because the title companies had all the great suites at the forum and had events that they put on and supported. And you would say, hey, I want to have a real estate agent event and invite 200 people, and your title company would sponsor that, and they would pay for the venue, and they'd bring the food in and that sort of thing. And so when you're comparing title company to title company, they're offering the same product. Okay, we're going to ensure that you get good title to this property, and if something happens, the insurance will kick in. So it's the same product, just being sold by different brands.
Just whose pocket was deeper.
what sets you apart from saying, okay, no, I want to use this title company versus the other one? It's the relationship, right? The rep, and
100%.
And a lot of that was, shoot, if I give it to this title company, then I might, let's talk about one that probably doesn't exist anymore. Say Southland, right? Are they around anymore?
Oh, that's a good question.
I don't think they are.
Yeah. Okay.
Anyway, so Southland title, but my rep, man, they had the best tickets, and they would take me in a limo to, to the games, and it's like, this is the best, right? And they take you in the Forum Club, and you're like, oh my God, they're getting all my business.
I've heard stories, and I started 10 years ago, so this was after the Wild Wild West.
Okay.
And it's funny that you say all that, because the guy that actually trained me, or he kind of introduced me to title and took me on some car rides and stuff, he was pre-regulation.
Yeah.
And so his mindset was still not switched over.
Yeah, and I get that. So the reason I bring that up is today there really is no different. Like you can't even spend, I think, more than $25 for something, right? Like I don't even know if you could do that.
I think, don't quote me specifically, but I don't even think I can give you more than a bottle of water in the state of California.
Okay, so it's like not even like a cheap bottle of wine. There's heavy regulation, we'll put it that way. And so what really sets one company aside from the other, now it really is who published the lower rate. Number one.
Yeah.
Or, and this is why I asked the question, if there's a listing agent that's dictating, I want to use this title and escrow company, is it only about the relationship they have with that person? Like, I really just like Chris, man. He's a cool cat. I just want to see him and his family do well. Like, I'm going to refer him as much business as possible, because there really is no other benefit, right?
Well, I mean, I'd still say relationship, right? Because, I mean, I've never lost a client to price. I'd say on the real estate agent side, I have my speculations of why they use who they use. And I don't think they're, I even hate to say this, but I feel like some agents will use, say, a title company, because the title company is paying for, the title rep is paying for their pictures, to get done on the house, or they're paying for flyers. I had an old neighbor. I'm like, hey man, he's crushing it in Orange County. I mean, like $5-10 million homes every 30-60 days. And I'm like, can I, would love to earn your business. He's like, well, can you give me, can you get pictures done? I need my marketing done. I need this done. And I'm like, no.
So you're saying they're doing this under the table?
Yeah, they're doing it under the table.
They're just,
I mean,
got it, under the radar, I guess
under
I would
the
say.
radar, yeah.
So very
not
interesting.
Ethical. It's still wild
because
west,
before it was
old
really,
school.
it was all in the books. I mean, the title companies were writing it off, and they're like buying the suites and doing all those things.
There's
it was
kickbacks nowadays. I mean, there's some. I mean, you see it in the news. I think there was just something in New York. There was just something the other day that
we hear all the time about these things happening. But okay, so barring that, right? Let's say everybody's on the up and up. It's about the published rates. Who gets to the bottom first, I guess, in some regard. But you can't keep changing your rates. So you got to publish them, and then there's a period of time that has to expire before you can publish again. So you're constantly tweaking this out. So rates are one thing, and so it's important that I think the consumer know that they can shop.
Correct.
And it's in the paperwork that they can, but they don't really think about that, because usually the real estate agent's dictating it, or the lender.
Yeah.
But let's talk about the shakeup in title right now. And I think this all started a few years ago when there was a talk of blockchain. Okay. I think that's really when this, not that it didn't exist before, but when the acceleration of the communication about title insurance and bringing title insurance costs down, and why is it not, easier to do. So when we think about blockchain, the idea being that if title were on the chain, then you knew, or you would know if it were on there, that when you take the title of that property on the blockchain, that you definitely have good title, right? Because anything that would happen would be on the chain and you would know about it, right? That was kind of the idea of this.
Yeah.
Where it falls apart today, that maybe we get to in a half a decade, maybe it takes a decade, is it can't be everywhere like that because LA County may record within 24 hours, but then, Maricopa County maybe, 2 weeks, et cetera. And so you don't have the same continuity across the United States for this.
Yeah.
But the idea of you don't have to do the research, that it sits on the chain, that when you take over the title, you have the title, nobody else can have it. The concept of that is like, why shouldn't title be a lot less expensive than what it is? If I'm paying thousands of dollars as one of my line items in my closing costs for this every single time I do a transaction, shoot, I know that nobody else has done anything to my property in this period of time. Why do I have to pay for it again? And so we've seen these things like the attorney opinion letter come out.
Yeah.
So
AOLs.
to help to reduce costs. Talk to us about what is an attorney opinion letter versus title insurance.
So it's not nearly as comprehensive as the title insurance policy. So what it's gonna cover is essentially the basics of what can be searched public on public records. So it's not going to protect you from forgery or a construction lien that isn't on, recorded somewhere. It's just going to basically, hey, you go look at your public records, and it's going to be whatever you see is what you get, right?
Okay.
And they're insuring that. It's not comprehensive. It's
Who's insuring it?
who?
The
company?
The attorney opinion letter. You said they're insuring it. Who insures that? So
There's
if the
I think
opinion
there's
letter says
two-
there's no liens on this property other than these are disclosed on this report,
Yeah.
and something shows up, who covers that?
It's the insurance the insurance company, like the AOL, who's providing the AOL. So I think there's two. I don't know. Maybe we could look it up to see who they are, what companies are.
So there's a title insurance company behind these attorney opinion letters.
They're not even title insurance companies because
They're just insurance companies.
I don't even know. Maybe we could look it up. They've approached us at like Stewart to basically underwrite certain things for them, and we're like, why the heck would we do that for you guys?
Okay, so what should we look up? Like who underwrites attorney opinion letters for transfer of title on real property? Of title on real property. Real property. When we say real property, that's tangible, like a real asset. Licensed attorneys, title transfers, underwritten the same as title. Same issued by licensed attorneys are typically underwritten by the same way the title insurance is, while some AOL, it's attorney opinion letters, offerings may include attorneys or issuers, coverage or partial. So it's their errors and omissions coverage, I guess, of the attorney.
Yeah, there's no
actual insurance company other than the E&O.
Yeah.
So it's got to be. My guess is that these opinion letters have very limited coverage.
Super limited. I mean, it's basically here it says the title insurance provides broader coverage, while AOLs may be more limited, particularly regarding risks not readily apparent from a public record search.
Yeah.
So there's no. I mean, they've been trying to push AOLs in order to reduce title costs and saying that, it's going to cover the same thing, but it's just not true.
It's not.
Yeah.
So to me, it feels like the opinion letter may be more valuable on a refinance than a purchase.
Could be.
Because when you're selling the property, you're not given enough incentive to disclose what may affect the title. Yeah. Whereas if you're refinancing it, you currently own it, you're still going to own it. It's just the lender's risk for good title. Yeah. And so some lenders make the decision that they're okay with opinion letters versus not.
Yeah, we had an internal, really smart guy that works for us at Stewart, and they did a full, just deep dive into this. And I wish he was here. He could talk. He could talk circles around this, of just exposing why it's not good. But when he was talking to us a couple months back, they were saying that it's essentially the same cost on a refinance, and you're not getting the coverage that you would there. So why in the heck would you choose an AOL for?
It's been my experience that they could be a lot less.
That's what they say, right? But then there's all of these other ancillary fees that they're not exposing. So when you took the apples to apples comparison, it was like pretty much the same.
Yeah, I know that there are some big lenders in the nation that are pushing for these, these less expensive policies.
Oh, yeah.
Which is consumer friendly, but I think we've yet to see what happens if something goes wrong.
Yeah.
And that's where it'd be interesting to see with the lack of coverage.
Yeah.
What happens? Who gets hurt? Is it the lender that gets hurt?
Yeah.
Or is it the consumer that gets hurt?
They take risks. I mean, there's especially with these big fintech lenders that are coming out. I mean, they have such a process to dial into their clients and customers that mitigate most of the risk, and they can calculate, hey, if we're wrong, X amount of times, we're still going to be profitable based on
that could be
right. So I mean, who knows?
It's all the actuary numbers.
Yeah.
I'd like to kind of divert the conversation for a minute into the shakeup of title and what's happened over the last couple of years, what may be happening in the future. You've got a lot of real estate companies, large brokerages, and you've got a lot of large lending companies that have gotten into the title business. Okay.
Yeah.
So they're like coming in and taking a big chunk of your business. Now, a lot of those are underwritten by the big three, right?
Correct.
So meaning that they're a title insurance company. They filed to be a title insurance company, but they're not actually, they're a conduit. They're not actually providing the insurance. Or a conduit to First American or Fidelity or, Stewart Title. If you guys do that, which
we
I don't
do,
know.
yeah. I mean, that's one of our, I think one of our big, what do you want to call it? Channels of income.
So, like, if you've got a Kaufman and Broad or Toll Brothers, and they're like, no, you're going to use Toll Brothers title insurance.
Yep.
They're not really the insurance company, maybe Toll Brothers, but it's underwritten by Stewart Title.
Yeah, they're writing on our paper.
Right.
Correct.
And so you get a piece of it, they get a piece of it, and it's almost like a joint venture, if you will, right?
Mm-hmm.
How much more of that type of business is this growing to? It has been growing for the last couple of years. What are you guys doing to help, kind of curtail that in the upcoming few years?
I'd say if you're considering joining the AmeriFund team, it's a really good idea.
We as processors at AmeriFund Home Loans support the loan officers in every aspect of the loan once it comes into processing because we want them out there marketing themselves and originating more loans and supporting more borrowers.
Competitive commission plans are a given, and powerful technology is expected, but what truly sets us apart is our culture. We've built a solid support system for our loan officers.
If you're interested in joining the AmeriFund team, go to amerifund.com/careers.
So, I mean, we have a whole team dedicated just to adding these people on, right? So
you've embraced it as part of your business.
Oh, 100%. Yeah, absolutely. And some big lenders, they're doing massive transactions, volume. They want to keep as much of the, profit as possible. So they'll start a title company and Stewart will come alongside and say, hey, we'll give you access to,
So you do all the back office.
All the states, yeah. Well, they still, we give them, I don't know the internals just because that's not my division, but we do give them the paper, and then they have their own curative, and they have their own title company per se that, you call it, Kaufman or whatever you just use, right?
So their name goes on the policy, but somewhere in the policy you see who the underwriter is.
Or First American or all the other bad guys.
Because as I understand the way that those are working, whether they are true joint ventures or title companies that have you as the underwriter or an MSA or whatever the structure is that the insurer is doing really all the back office work, and then there's a certain amount of the front office work to legitimize it that the title company has to do. And that might be gathering XYZ documents or maybe doing some limited search through a portal or something along those lines. And it's probably honestly getting more and more technically involved where AI can do part of it and it's automated and all that sort of thing. So I think about this and I think about the longevity of the title insurance company and blockchain and what's happening at the highest levels, Rocket.
Yeah.
they don't use they have their own title company. Now, I don't know if it's self-insured or not. I don't know if they're using a Fidelity
they are an agent. Who do they use? It's I can't remember off the top of my head. But yeah, they have their, in quotation marks, own title company, but they're still
they're
agent
not underwriting it
of an underwriter.
Yeah, so I see that happening more and more.
But typically with those, we get a lot of business from companies like that because their service and the execution of closing an actual deal isn't nearly as good. Because it's like, your Stuart's really good at title insurance. Like, that's what we do, right? So when you get other folks that don't necessarily care about the service, I shouldn't say they don't care, but they're not necessarily, maybe it is they don't care about the service. I mean,
or they're just not as adept at it.
Yeah, they're not. Exactly. They're not going to work as hard as we are because we know if we don't perform, you have all the other options.
Yeah.
Right. So I get countless amount of orders from other folks that have their own title company internally, but they say is no good, or they can't close fast enough, or they can't do this or that.
Yeah.
Whatever the reason.
Got it. That's a very interesting dichotomy there, because even in the mortgage business, I will see a lot of people that may work for these big companies, say Rocket, or one of them, and then those employees are getting their loans through a mortgage broker.
Yeah.
And it's essentially because they know the motivation of that loan officer. The mortgage broker company is super motivated. They're paid commission only, and they're very efficient. And they can do stuff that the captive audience of where you're working, whether it be a bank or a company like Rocket or some big online company, a better company or something like that, that they actually know that the process is better through a local mortgage broker. And so they do their own loans that way.
Yeah.
But yet they're getting all the consumers that go through their portal and their process.
Well, I mean, to your point, it's exactly why we say, and we need to educate the average consumer to go shop for title insurance, just like you shop for your loan. Like, you shop for a car. Like, do you just go to the lot and just buy the very first thing? You probably should go see 2 or 3 of the same and get the different.
Okay, so let's talk about that, because in practicality, I referred a friend of mine to you just a month and a half ago, but he wouldn't have known how to reach out to you. There's no way. What's he going to search online to get a quote for title?
Yeah.
How does somebody do that?
It's tough. I mean, I love that you used the word traditional a lot today, but the mortgage industry is archaic, and I think we've really fell short on education and keeping up with technology. And in HomePie, you guys are doing, ahead of the game, but I really think that's where the lack of education is. And I think with Instagram and Facebook and TikTok and the newer generations of just having these conversations of, hey, this is something that you can save $2,000 or $3,000, $4,000, even a couple $100, right?
Yeah.
You see a $20 bill on the ground, you're going to pick it up,
right?
So why wouldn't you do that? In one of the biggest transactions.
I'm just curious, in practicality, how they go about doing that, because most title companies don't have like a consumer division where it's consumer direct.
Yeah,
you gotta know who to contact.
Well, it's not I'm just thinking about the process of what it would look like. So I would just be educating every single person that I know that, hey, you can go shop for your title insurance, and I'm encouraging you to do this. Knowing that they may not even purchase or refinance a house in the next 1, 2, 5, 10 years, right? But it's still the education that when it does come time.
I totally get that. And that's what we're doing today.
Yeah.
But again, the point, click, and price, you can do that with auto insurance, no problem, right?
Yeah.
You go online, you go, auto insurance quotes, right? Have you done this, Micah? You get quotes for auto insurance? Who do you use? AAA. Okay, so your folks use AAA. You're like, oh, I'll just use AAA.
Yeah.
Right, that makes sense. But let's say that you're a little bit older, and now you're like, shoot, I'm paying a lot of money for auto insurance. I wonder if I can get it for less. Mm-hmm. You can just quickly go online, do a search, say, auto insurance rate, best auto insurance rates, and they'll have 6 different companies that click on and fill out their forms. Go do that right now for title insurance. Say, get title insurance, the best title insurance rates, right? Let's see what happens.
Yeah, so a lot of title insurance landing pages should have a calculator where you could plug in your loan amount, your zip code, and get back those fees.
Okay, so let's just go to that first one. Because that wasn't sponsored, right? Yeah. How much does title insurance cost? This looks like it might be a blog, though. Yeah, it's just an article. Is there something in the bottom of the article to click on? No. So maybe.
Oh, yeah, there it is, right there on the bottom left.
Where?
Title fee calculator.
Okay, try that. Okay, instant calculator. Go ahead, launch it. All right. And let's see at the end of this if you can actually connect with somebody.
See, but I think this is too crazy because now you have, I guess you can click all fees, but closing costs, endorsements, recording fees. Like it's like speaking a different language to the average consumer.
Right. And that's what I'm saying, how this isn't easy for somebody to, just search for their own, to shop it. So it's easy to say you can shop for your title insurance, but is it practical to do?
Sell with mortgage.
Yeah. Sale amount. Just put like $1 million and put a loan amount of like 700,000. Yep. 700,000. Okay.
One more zero.
Yep. One more. And then, property addresses. Okay. Just hit next.
Just next. See what it says. Oh, click all fees at the top.
Oh, yeah, the little boxes. Okay, next. Oh, county. You got to put, you did have it in there, but whatever. There you go.
Oh, no, it says city is what it looks like. It's in the red.
Yeah, up at the top there. There you go. Just pick any of them. It doesn't matter. Okay. So now...
So we can obviously, we don't even need to get into it, but see, when you're talking about blockchain, see how many lists or options there are just for the city or the county of Ventura. Right. Imagine trying to get every county, city on board, for
that's
the blockchain.
I know that's the challenge.
And you have it's just.
That's why it's not going to happen that quick. Okay, so scroll down to title fees. So it's giving you the $1,111. There's looks like a credit of some sort, and then so scroll down. $1,588 is the total fees. Then you got closing costs, recording fees. Scroll down. Conveyance. Oh, that's your your tax, your transfer taxes. Okay, that's based on county. Okay, recording the trust deed. So $5,237. Okay, there you go. So that gives you the county clerk's information. That's for recording. Keep going. Is there anything for the title insurance? Let's see. Estimate, quote, email, preview, start over. Nothing.
If you click print preview, does it summarize it for you? I'm just curious.
It just downloads it a PDF. So look at that though. Is there contact information on there?
Okay, it gives you the policy, Eagles policy. So
yeah, but where is there contact information? Scroll down. So let's just say that you did this at 3 different companies. You did the rate search. Yeah. And you're like, okay, this one looks like the much better price. You got nobody to contact, right? So you say you could shop it,
yeah,
but no, that's the county recorder number. So you say you could shop it, but can you? I don't know. I think the only way you could do that is you got to call, somebody in the business and say, hey, just like my buddy did, right? And he said, yeah, Brad, who can I call to get a good rate on my title insurance? And I go, hey, give Chris a call. And I gave him your contact information.
Yeah.
So, in practicality,
it's an issue.
We just think, and we just did a Google search on this. So you would think that it would come up. So anyway, we got a long ways to go. But this is why title insurance is so confusing for people. They don't know what it is, number one. Yeah. So we talked about what it is, and then justifying the cost of it, and then shopping for it. But it's not really that practical to shop for it. So I know with HomePie, we do make it easy. We do make it easy to get a couple quotes, and then you do get direct contact with people. I've been very thankful that Stuart's a part of that. Got a couple of title companies that are. And, we're trying to bring it as closer to the consumer as we possibly can, because these are savvy people that want to save on anything they can when they're selling a home, on commissions, on closing costs, and all of that. And so I think it's very forward thinking, along with all the other business that's out there, on what title companies can do to get more direct to the consumer, because they're getting further and further away through these conduits, right?
Sure.
The conduits are getting closer, you're getting further, and it's a business that really brings a lot of value to real estate, and we need to preserve it. Until blockchain is the thing, it's got to be preserved, and we know that's a long ways away.
Yep.
Awesome. Well, is there anything else you want to share with anybody?
No, I mean, I think we covered quite a bit. I mean, as much as you can cover with
as much as you can with a
exciting
dull subject like title. We've made it super exciting, though.
Yeah.
All right. So since we talked about Consumer Direct, since we talked about reaching out and getting a quote, if somebody wanted to reach you and get information about title insurance, how can they get a hold of you?
Just call me, email me, whatever. I mean,
give them your information.
Yeah.
What is it?
Call me. Email me. That'd be easiest. Chris.Norman, CHRIS.NORMAN @Stewart.com. STEWART.
Yep. Stewart. STEWART.
Yep.
Awesome. And let me tell you guys, Chris is nationwide, and so it doesn't matter where you are. They've got all sorts of services. They have attorney closing services. They do escrow. Like I said, they do bundling. Yeah. They're one of the greatest. And, not everybody is out there, but I'll tell you what, these guys are just really nice too, as you could tell with Chris. So
we're not one of the great. We are the greatest.
Okay,
there's a reason I've been here.
Yeah, I had to say one of. You can say you are. All right. Awesome. Guys, look, thanks again for joining us on this edition of The Blueprint. If we brought you value, and you liked what you heard and you want to hear more, please like, share, follow, subscribe. All those things really help us out. And we will continue to bring you this valuable information, whether you like it or not. Thanks for joining us today.